Afternoon, everybody. I think I'll get started. My clock says it's 3:30, so we want to make sure we stay on time. So I'd like to first introduce myself. My name is Frayne Olson. I'm the crop economist and marketing specialist with NDSU Extension. This afternoon, I'm going to be visiting a little bit about the crop market outlook. So let me start by sharing my screen very quick, and we will get going here. So here's my contact information. First, I want to thank you guys for hanging in there. I know this has been kind of a long day. There's been a lot of presentations, a lot of information that's been made available. As mentioned before, we will have some office hours scheduled for tomorrow, not only in the morning for Dr. Jeremy Jackson and also Ryan, but also then later on in the afternoon for myself and Tim Petrie, Dave Ripplinger, and Brian Parman. So first, thank you for hanging in there. Hopefully you'll find this valuable. I'm going to be taking some short breaks in between the different sections of my presentation to see if there's any questions. I just want to check in. So feel free to hopefully use the Q&A function at the bottom of your screen if you do have any questions. And again, I'll lean on my colleagues to try and help me monitor the Q&A as well as if there's anything that comes in under the chat. So with that, I'll try and get started. My job today is to try and give you an overview of the crop markets. And obviously there's a lot, just like as Tim mentioned, there's a lot of things happening, not only in the livestock sector, but also in the crop sector. So before I begin, I just want to provide a quick overview of kind of the crop agriculture or the agronomy side of the line in North Dakota. Now this is from 2019 information. These numbers do change a little bit from year to year and from time period to time period, but I did want to try and provide a kind of a broader overview of which crops we grow. We have a very diverse agriculture here in North Dakota, as most of you are very aware. This column, I mean, these crops here are categorized or sorted by planted acreage. So if you notice, there's two columns, planted acreage as well as the value of production. So think about that as gross value. It'd be the quantity of bushels produced times the average price received. So we really in the state have three large crops, three kind of the primary acreage as well as the value of production in the state, which will be hard red spring wheat, soybeans, and corn. And I'll go through a market outlook, kind of give you an idea of what are some of the things that are currently happening, but more importantly, some of the things that I believe will be important as we move forward in time. So I'm going to focus on those three crops, but please realize we have a wide variety of other crops that are grown in the state. I do try and keep up with the market conditions in most of those other regions or those other areas. So if you do have some questions about what's happening in some of these other smaller market crops, I'd be happy to try and answer those as well. So just to point out again, at least in 2019, I'll use my arrow here, 2019, largest planted acreage of a single crop was actually in hard red spring wheat. Second was soybeans, and then the third was corn. Uh-oh, what just happened? God damn it. It was working fine all day. Jesus Christ. God damn it. It won't even break out. What is going on here? Close.
Hey, everybody. Looks like we lost Frayne for a minute. I'm hoping he's going to log back on. I do have his presentation if we need to troubleshoot that way. We'll give him just a minute. Thanks.
Can you guys hear me now? I am so sorry. I don't know what happened.
Loud and clear.
Can you guys hear me?
Loud and clear, Frayne.
Okay, you can hear me. All right, great. I'm not sure that I can hear you, but I will keep going. So I sincerely apologize. I'm not really sure what just happened. My computer just totally locked up. So I will begin.
It was 2020, Frayne.
Okay, now I can hear you. All right, so I just wanted to provide a quick overview. I'll go through these first slides relatively quickly and make sure that we get caught up a little bit. Again, when we look at acreage produced as well as value of production, we have these three large crops. I'll focus on those. We have had a shift in acreage over the last several years. I just wanted to go back historically to look at planted acreage of the primary crops. Now, when we talk about wheat, that's all wheat, including spring wheat and durum. Noticed over the last, approximately 30 years that we've seen a gentle reduction or continuous reduction in wheat acres. We've seen an increase in soybean acres, which is the green line, and then also in corn acreage, which is the gold line. Part of the reason we've seen the drop off in all three of those in the last couple of years has been really because of prevented plant. And so, there was some adjustment in planted acreage as a result. I also wanted to go back in time historically and just show you what has happened with prices. Now, I'm using the futures market prices rather than cash market prices. It's a little bit easier to access. Local cash market prices in North Dakota are really first determined in the futures market, and then there's a discount called the basis that's applied to get us to the local cash prices. But it does provide some historical context. This is for corn futures, so this would be for base corn futures. These are prices that are in absolute terms, so they're not adjusted for inflation. Now you'll notice in the area that I have circled here in the far right-hand side, we've seen a pretty nice recovery in corn as well as soybean and wheat prices the last several months. For the last couple of months, we've seen this nice, slow, steady climb upwards, and there's a specific reason why that has happened, which I'll get into in a moment. But I do want to give you some reference points historically that we've been in this kind of price range for corn. I'll do the same thing for soybeans and wheat in just a moment, since about that 2014 time period. Now, there's a lot of farmers that look back here at what happened in 2011, 12, and 13 and say, boy, I wish we had those kind of prices back again. It is possible to get to those levels, but I don't think anytime soon. There was some unique set of conditions that led us to those relatively high prices that we saw in that time period. So my point is that even though we've seen a pretty nice recovery in commodity prices for corn, soybeans, and wheat over the last couple of months, that recovery is really coming off some relatively low price levels. When we look at, and again, I want to emphasize, this is the price for delivery of corn today. So if this would be spot price for the delivery today, it's not necessarily a forward contracting price. But again, just to give you some reference for what has happened over time. When we look at soybean prices, so this is Chicago Board of Trade soybean futures price. And again, all of these prices, the graphics I created yesterday, so the futures markets went up a little bit again today. So these are today's prices are a little bit up from what we see in these graphs. The moral of the story is, again, we see this relatively strong increase in prices as we went through the summer months of 2012. Now, obviously, when COVID hit, we saw a price reduction. When back here in 2018, when the trade war between the United States and China had a pretty significant impact on soybean prices, we did see soybean prices take a pretty dramatic fall. We've been in these lower levels for a while. We finally now have a recovery in price levels to a point where farmers are feeling much more comfortable. Profit margins with today's prices, with average kind of cost or typical cost of production, and with some typical yields for corn and soybeans, there's profit margins available. When we look at spring wheat, the profit margins are still pretty thin. We've had a general downward movement in wheat prices over the last several years. We've seen a recovery now in the last several months, which is a good thing. But at today's price levels, most of the wheat guys are kind of breaking even if you look again at typical yields and typical cost of production, but nowhere near the levels that we saw back here in this 2011, 12, and 13 time period. So if we're talking about farm profitability and the amount of revenue that's been coming from the marketplace relative to the amount of money coming from, for example, farm program payments, whether they be the traditional farm program payments or those supplemental payments, those ad hoc emergency programs that came in that Brian Parman was talking about, we're now looking at price levels and a recovery that people are feeling a lot more comfortable. And every time we look at price forecasting, as we look into the future, there's a whole bunch of unknowns. As Dr. Jeremy Jackson mentioned this morning, there's a lot of unknowns that occur. You do your best job to say, given the conditions today and what we see in the near-term future, what do we expect to happen? But there's always these wild card events that occur that suddenly put the shock into the marketplace that we don't expect. Now, historically, I usually say the weather market, when it comes and its linkage then to total production, as well as politics, are the two big unknowns. Those are the two most difficult things to try and forecast. Well, now more recently, we have to add the third item on this list, which is really the public health portion, which is COVID-19. And again, nobody really saw that coming. And it really did cause a lot of disruption within the grain marketing system. Now, when I talk about weather, a lot of times we think about what's happening domestically, but I really want to emphasize that North Dakota agriculture, as well as U.S. agriculture, is now fully integrated into the global market. So what happens in, let's say, again, I'm going to talk a little bit about some weather forecasts coming out of South America and some weather forecasts coming out of the Black Sea region in Russia and Ukraine. Those kinds of weather events can have as much of an impact on grain prices here domestically as what happens in North Dakota. And so we have to keep that in mind, that we really are looking and thinking about a global economy in the crop markets and in the grain trade. And again, I'll explain why in just a moment. So whenever we have a production shortfall, whenever we have, whether it be in the US domestically or even on the global standpoint, there's this big readjustment that occurs within the trade flows. And so I always say, well, if we have a shortfall in production, yes, prices will go higher. The question is how much higher, and it depends on, well, which countries are being impacted and what is their role within this global economy or the global grain markets. On the politics side, the last several years since the trade war with China began, trade policy, I've been talking a lot about that for the last 2.5 years. I'll give you kind of a brief update on where we stand right now. There's been obviously a lot of changes and renegotiation of both multilateral as well as unilateral trading agreements. And a lot of the agreements that we're working on right now have really been trying to reduce the non-tariff barriers to trade. It's those sanitary, phytosanitary limits, those barriers that other countries have put up that limit our ability as US exporters to be able to move into their marketplace. We've been spending a lot of time talking about tariffs and the impact that tariffs have on prices. That's a much more direct method. One of the other things, if you go back several years, we also had economic sanctions. And a lot of times the US will put an economic sanction on a country to try and punish them or penalize them for something that's going on in the global geopolitical arena. And again, that can have some pretty significant effects on our ability as US producers to be able to sell internationally. The other thing that is always in kind of the back of everybody's mind is what happens with farm and energy policy. Dave Ripplinger talked a lot about energy policy and the impact that's going to have not only on ethanol and ethanol consumption, but also potentially on the biodiesel market. And I'll talk again about those in a few moments. And we'll obviously spend quite a bit of time talking about COVID-19. So with that, for right now, I just want to take a short break. Are there any questions? before I move on? Are there any questions? All right, hearing none and seeing none, I will keep moving. So, oops, what just happened? So I'm going to start with my discussion about the corn market, and I won't go into a lot of the detail with these charts or graphics right here, but I do want to provide a quick overview. Fortunately, in the United States, we do have a see, am I still sharing my screen? David, can everybody here still hear me?
We can hear you, but Dave, you're doing the screen, aren't you?
I am right now.
Yeah. Dave
Oh, okay.
is doing the screen, but we can hear you fine.
All right, I'll keep visiting then. Okay, so with the this is a supply demand table for corn. Now, fortunately, again, we have USDA provides monthly updates on both domestic as well as global supply and demand conditions. And so this becomes the starting point or base for a lot of the discussions that go on in the grain marketing world, both domestically and internationally, because there's a lot of international buyers that also follow this information. The top half of this table focuses on U.S. domestic supplies, both what we produce as well as what we have left over in inventory from the previous year. The bottom portion talks about or focuses on the consumption rate. How quickly are we using up our available supplies? And the very bottom line, called ending stocks, is really how much do we expect to have in reserve, in storage, just before the harvest of next year. So all of this information is put together on a marketing basis. All of this information is put together on a marketing year basis, not necessarily on a calendar year basis. So the marketing year, we're looking at not only the year that was produced, but then also how it's consumed. So the marketing year for corn and soybeans starts just before harvest, starts on September 1. We count in the production for that year, and then we talk about how quickly are we moving through those supplies. On my next slide, this is a graphic historically of both production and consumption, but also ending stocks, or that usage number. So the green line on top is total production of corn. The red line is total consumption of corn. And the blue bars in the bottom are the stocks to use ratio. So a couple of things to notice out of this. Number one, in general, our trend line for corn production, total bushels produced in the United States, has been growing, but we've also seen that growth rate in consumption. And notice how closely those two are matched up. And again, part of the pricing function, part of the reasons the market work is they're trying to ration the available supplies over time, as well as signal what we need to produce for the upcoming year. Now, the blue bars in the bottom is that stocks to use ratio. So what we're looking at is our ending stocks divided by our total needs. So it's scored as a percentage, which is on the right-hand side of this graphic. So that percentage, as the percentage our stocks use gets tight, as that number gets smaller, we tend to see higher average prices, but we also tend to see a lot more price volatility. And if you notice, anytime the green line is above the red line, we start to see our ending stocks start to build. And anytime that the usage or the red line is above the green line, we see those stocks, ending stocks, start to come back down again. So what we're seeing now is not only the general upward movement in production, but our consumption is keeping pace with it as well. We're now starting to take some of our ending stocks down. And again, there's a specific reason for that. So on my next slide, you'll see that the consumption rate. So where does our corn go once it's been produced? The blue line on top is the feed and residual. Again, feed primarily goes into the livestock sector. Tim covered a lot of the kind of the growth rates and the number, the cattle as well as pork and poultry numbers that we're seeing. And obviously there's a correlation between pounds of meat produced as well as corn consumed. It's actually technically corn and residual. Residual really represents the spoilage and wastage. It's the amount of grain that we know entered the system. We're not really sure where it disappeared. Typically spoilage and wastage, relatively small numbers. So think of the blue line as the amount of corn that goes into the livestock sector. The red line is the amount of corn that goes into the ethanol sector. So this is corn that's being sold to an ethanol plant and processed into ethanol. The black line is exports. So again, those are it's whole corn that's being shipped to another country. The green line is all of the other industrial and seed usage that doesn't include that ethanol category. So the little dots on the far right-hand side represent the current USDA forecast. So you can see the historical trends, but also what USDA is forecasting as we move now into this 2020 marketing year. So how quickly are we going to be able to use up and consume the corn that we produced in this 2020 harvest? A couple things to notice that I want to point out. Number one, that feed number continues to slowly grow. It has been growing since the 2012 drought. And again, a lot of the information that Tim provided feeds into that we're starting to see a rebuilding of the meat sector. We're starting to see more animals that we need to feed. And as a result, we're also looking at higher corn consumption. The red line is the one I'm a little bit concerned about, because as you notice, over the last 2 or 3 years, we've seen a reduction in the amount of corn going into the ethanol industry. Now, that may not seem like a really big number, but it does start to add up. And as we get these larger and larger yields, as we start getting more and more corn acres, the question is, where are all these corn bushels going to go? Now, fortunately, if you look at the black line, which is exports, the current forecast is for a pretty substantial rebound or recovery in our export pace. And a lot of that really has to do with the export pace into China, which I'll talk about in more detail in a moment. So in today's world, what we're looking at is, even though there's been a cutback in the amount of corn going to the ethanol sector, that has been more than compensated by an increase in the amount of exports and export sales. So on my next slide, this is a real quick chart of ethanol production on a weekly basis. So again, as Dave Ripplinger mentioned earlier, the Energy Information Administration keeps track of weekly ethanol production. This is just a graphic of those numbers. Notice that massive drop that we saw at the beginning of 2020 as we started this economic shutdown. We've seen a fairly quick rebound after we started opening up our economy again. But as David mentioned, the recovery is not quite to the levels that we saw before COVID. And a lot of that has to do with the amount of miles driven, the amount of gasoline that's being consumed. And the expectation, at least now for probably the next 6 to 12 months, is total ethanol production will probably remain at levels that we see very similar to what we see today. So even though it's a recovery, the ethanol sector is not going to be quite the capacity it had previous to the economic shutdown. Again, once we fully open up our economy and we begin driving, there's still some debate and discussion about how many gallons of ethanol are actually going to be required. On my next slide, you'll see exports. Now, this is a graphic of accumulated exports. So what this says is every time we have an export delivery where the corn is actually loaded onto a vessel and leaves the country, or loaded onto a train and leaves the country, it's scored as an export. So what we're trying to do is every time that the grain leaves the country, we add it to the pile of exports. We'd like to see this pile of exports grow as quickly as possible. And this export pace, how rapidly are we selling our corn and being able to deliver it, is a pretty has a pretty heavy influence on market psychology and then also the underlying price levels. So as you can see, the red line is where we are currently. I've got the other colored lines are different years. Right now, we're kind of right in the middle of the pack as far as actual corn exports. On the next slide, I try and, yep, there we go. Next slide, I try and break down and say, well, who do we export to? Who are the major countries that buy corn from the United States? And this becomes important in particular, not only think about trade agreements and the politics of things, but also as we get into the discussion about COVID and COVID-19 and the impact that might have on grain prices. So the first 5 columns there from 2015 through 2019 are annual totals. So that's the total amount of corn that was purchased and delivered to these different countries for the 12-month period. The column on the far right-hand side is accumulated. Let's see, the column on the far right-hand side, see if I can get my there we go. Get my camera working again. The column on the far right-hand side is accumulated export commitments. So an export commitment is where there's been a contract signed to deliver grain either right now or in the near future. So this would be all of the grain that has been not only delivered, but also promised for delivery in the future. And again, the grain markets, in particular, the futures market, watches this information very, very closely to try and get a read on how many bushels have already been committed. So if we look across that line, the top buyers historically of U.S. corn has been Mexico and Japan. You've seen, especially for Mexico, the amount of corn we've been selling to that Mexican market has been slowly increasing over time. If we look at their accumulated sales to date, that's pretty much on pace with what we've seen historically. Those numbers for both Mexico and Japan are very similar to what we've seen for this time of year in the previous years. The surprise to everybody has been that roll labeled China. And I'm going to unfortunately have to spend a lot of time talking about China and what's going on there. Notice the large number, 10.77 million metric ton. That's a huge, huge number. Historically, and I look back over time, China's previous peak in purchases was actually in 2012 at 5.17 million metric ton. So the peak, the highest point that they had previously purchased was 5.17. They currently have 10.77 committed. And so that's double their previous record purchases. Again, this has really been a major surprise to the corn market, but also a kind of a surprise to the soybean market as well. And there's a lot of question now going on what does this mean as we move forward in time? Will these very large export sales into China continue, or are they going to start to drop off as we move closer to the harvest coming out of South America? With that, is there not next slide? I think is questions, correct? Yep. So let's just take a short break. Are there any questions before I continue to move on? All right, seeing none, I will continue. Let me talk again, quick overview of what's happening in soybeans, and we'll get into the impact of China and COVID in just a moment. Very similar format for the table. This is for soybean and soybean production and usage. The top portion of the table is total production, available supplies, not only what we produced, but also, again, the available supplies from last year that we're bringing forward to be able to use this year. The bottom portion of the table details some of the usage for soybeans. And for soybeans, we have 2 major usage, would be domestic crushing and exports. And the very bottom line, of course, is ending stocks. So the red highlighted number is the forecast for the amount of grain we expect to have in the bin just before harvest of next year. And I'll show you a graphic in a moment where that forecast is extremely tight now relative to where we have been the last couple of years. So on my next slide, I provide that historical perspective again, the green line being total U.S. production of soybeans, the red line being total consumption or usage of soybeans, including exports. And then the blue bars on the bottom are, again, that stocks to use ratio. And you'll notice that we saw in 2017, 18, and 19, a pretty rapid buildup and then also a bit of a contraction of soybean ending stocks. Our inventories of soybeans were very, very high relative to historical norms. And that can be directly traced back to the trade war between the United States and China. Before that happened, I always used to say that, well, typically we carry anywhere from 5 to 6% of our total usage in reserve. So that 5 to 6% carryover stocks is a very normal number. And we're actually sub 5% right now. Given the current USDA forecast for export pace, for domestic crushing capacity, it looks like we're going to have some pretty tight supplies coming into the harvest of next year. And again, part of the job of the market is to try and ration that usage to make sure that we have enough available supplies so we can reach the next harvest. And this is one of the main reasons, again, that the soybean market has now taken off and made the pretty massive recovery that we've seen over the last couple of months. So on my next slide, I want to talk again, put in historical perspective, the usage of soybeans. The blue line on the top is domestic crushing. Again, that's soybeans that are brought into a crushing plant. The output from that is soybean meal, which goes in the livestock sector, and the other part is soybean oil that's refined into a variety of products. Just on a sidebar, I want to remind everybody that about 30% of our soybean oil is used for biodiesel. And so whatever happens in the policy, the federal policy with respect to energy and renewable fuels has an impact, obviously, on corn, but also has an impact directly on soybeans through the soybean oil complex. We also export about 25% of our soybean meal. And so even though we export about half of our soybeans, which is the red line, we also export about 25% of the soybean meal we produce in the United States. So the soybean market's very heavily tied to what's happening internationally. Again, on the red line, the export sales numbers, you can see that we've seen a pretty dramatic drop in our soybean export levels over the last couple of years, primarily because of that trade war between the United States and China. But now that we have this phase one agreement and that supply chain between the United States and China has been reopened, the current forecast is for a pretty rapid recovery on our export sales into that marketplace. So in our next slide, rather than using accumulated export sales for soybeans, I like to present this in weekly export sales, because what happens in soybeans, our exports are very seasonal. We have this peak demand, we have this peak shipping season for soybeans that starts in about October, about when harvest begins, and runs through about December. And then it drops off a little bit as we get into the winter months, and drops off again to a much lower level as we get into that January, February, and March time period, because that's typically when the South American crop is being harvested, and all of a sudden China, as well as other global buyers of soybeans, start to buy supplies out of South America instead of supplies out of the United States. Again, the red line is where we are as of this last week, the most recent information we have on exports. So you notice that we had this rapid increase in our export shipments. Very, very impressive numbers. Now, the underlying question is, how long will this high level of exports be able to continue? How long will this last? And how quickly will it drop off? And a lot of that will depend upon a couple things, not only trade relations between the United States and China, but also the potential size of the South American crop, which I'll talk about again in just a moment. Next slide, please. So if we look at, again, who buys U.S. soybeans, number one buyer by far is China. You can see across the top row, again, these columns are annual totals, except for the right-hand side, which again is, these are our export commitments. So it's not only what we have shipped, what we've delivered, but also what's been sold and waiting to be delivered into the future. And if you look at the current Chinese buying activity relative to where we are historically, even though we're only a few months into the marketing year, China has already purchased about the same amount of soybeans as they did in 2017-18 marketing year. Again, a pretty rapid rebound or recovery in total export sales. Now, one of the things that went on during the U.S.-China trade war was this thought that, well, if we don't sell soybeans to China, we'll just sell it to some other country. And the challenge with that is that if we're going to sell whole soybeans, if we're going to sell raw soybeans into the global market, we have to sell it to a country that has crushing capacity. And that's our underlying problem, is that China is by far the world's largest crusher, soybean crusher. The United States is number two, and then it's Brazil and Argentina, are very, very similar sized. And then we finally get to the fifth largest crusher, soybean crusher in the globe, which is the European Union. And so I'm just going to leave my video off. So if we think about where do we sell our soybeans, and if we don't sell them to China, there aren't a lot of good alternatives, the European Union being one of them and Mexico being the other. So when we look at our export sales to China, recovered very nicely. We're looking at some pretty aggressive sales pace. When we look at what's going into Europe and Mexico, the Mexican purchasing so far has been about on track with what we'd see typically, but all of a sudden the European Union has been dropping off, and primarily because of the large demand base that we've got going into the Chinese market. Next slide, please. This is the same graphic for US soybean exports to China only. So the previous slide was our export sales into the global market, everybody, and these are the numbers for China only. And again, notice that that very dramatic seasonal pattern. And also notice that as we get into 2018 and 2019 marketing years, those levels are extremely low relative to history. We're now back to those higher levels that we saw before the trade war began. On my next slide, this is basically the same information, but this is for total commitments. Again, it's what I saw you before. It's not only what has been shipped, but also what has been sold but not delivered yet. And again, this is accumulated sales. So every time we make a sale, we add it to the pile, and the pile gets higher. What we're really questioning right now, and the market's looking at very closely, is will that red line of accumulated sales now in this marketing year, will that continue to grow and stay above the green line, which is our historical peak of 2016-17, or will that red line start to kind of flatten out like it historically does and match the green line or somewhere near the green line levels? So again, the market's watching very, very closely at how quickly we're able to sell our soybeans into that Chinese market. Next slide, please. One of the key factors that the market's focused on very, very closely right now is, of course, what's happening with our major competitors, the other major soybean exporting countries of Brazil and Argentina. Now, this is a map. This is a soil moisture map. This would be soil moisture levels. It's computer generated map, but it's soil moisture levels in the top meter of soil, about the top 3 feet of soil. And I've tried to highlight in the blue circle there, the blue oblong oval, that the primary growing region for both corn and soybeans in Brazil and Argentina. And if you notice, both the northern growing region, which is Mato Grosso, as well as the southern growing region in Brazil, really some dry conditions, dry soil moisture conditions. Now, if you were to look back at this map a couple of weeks ago, we would have seen much drier conditions. They had some recent rainfalls. The soil moisture conditions are improving, but they're still not really fantastic. What this really means to me is that these core producing regions in both Brazil and Argentina are really going to be living rain shower to rain shower most of their growing season. So the point I'm trying to make, this is something the markets are watching. This is going to have a huge impact on not only current export pace, but also what might happen as we move into the 2022 marketing year. What are we going to do next year, and how many acres of soybeans are going to be planted, not only in North Dakota, but also nationally? Okay, so my next slide will be a question slide, so I'll take a short break. It does look like there's a couple questions that have popped up. So one of them is, what are the odds China's massive purchases, but not yet deliveries, are a political ploy and won't really happen due to the change in administration primarily? I'll answer that question directly, and I've got some additional information coming up in a few slides to try and justify my position. It is possible that they will cancel some of the orders. They've done that in the past, but based on what I'm seeing right now, I don't think those cancellations will be large. And in fact, I'd be surprised if they cancel any of the orders. I really don't see this as being politically motivated. I really believe that there's some underlying demand within the Chinese market, and I'll talk about that again in a few moments, that's driving this, that this is much more about their need for feed and feed products than it is about playing politics. So we might hear about some cancellations, but again, those cancellations, in my opinion, will be relatively small. They need the soybeans because their feed demand is there. Do you foresee even a lower soybean ending stocks number in the next WASDE due to the good exports? It is possible. So what USDA is trying to do is, based on the current pace of exports, they're trying to forecast what would the total forecast levels be for the entire 12-month period. And again, we don't know exactly what that's going to be, but USDA does use the current pace of exports to try and refine their forecasts as they move forward. It is possible that, again, if the strong Chinese buying continues, especially for both corn and soybeans, that they will cut those ending stocks numbers even further. And of course, that would obviously put a very strong base or support into prices. So if we do see a price retracement, that price retracement probably won't be very aggressive. Okay, so I'll move on. Next slide starts talking about wheat. Again, I'll try and move through this wheat section fairly smoothly. The wheat market's been a little bit different. Corn and soybeans, again, the wheat market's very dependent upon exports. I'll show you a graphic in just a moment. But our production level has been balanced with our usage level relatively well for the last several years. And we've had very strong carryover stocks. We've had inventories from the previous year that we brought forward into the current marketing year. And so there really has not been any major concerns or worries about what's been happening in the wheat market. Again, as those ending stocks become larger, as that stocks to use ratio is larger, we tend to see lower average prices, but we also tend to see very stable prices. And that really is reflected in what's going on within the wheat market. So if you move to the next slide, this is again a graphic of not only total production and total use of wheat domestically, but also that graphic on the bottom for the bars, which is the carryover stocks. A couple of things to note very quickly. Yes, we see some volatility in our total wheat production. Now, this is all classes of wheat, including spring wheat, which is the green line. And our usage numbers in the red line or maroon line also bounce around considerably, and I'll show you why in just a moment. On the production side, most of that has been yield variability. It's been the yield year-to-year variation in yields. From the usage side, a lot of that variability has come in the form of exports. And again, I'll show you a graphic in just a moment. What I'd really like to focus on is those blue bars on the bottom when we look at, the relative carryover stocks. What percentage of our needs do we have in reserve? And now we tend to carry historically, a larger volumes of wheat than we do for corn and soybeans for several reasons. But even based on historical averages, historical norms, the last 5 or 6 years, we've had some very aggressive carryover stocks or available supplies of wheat domestically. We are slowly starting to take those down for a couple of reasons, mainly because our production levels have been cut. We've been continually slipping on our planted acreage. Our yields now are starting to become more average instead of having above average yields as a partial offset. So the wheat market is responding very differently than the corn and soybean market. Next slide, please. When we look at wheat usage, how do we consume wheat? The blue bar in the middle is for food, what USDA calls the food category, which is really domestic wheat milling. Again, if you notice, look over time, that's a very, very stable number. It really doesn't change a lot from one year to the next because our wheat consumption and our flour consumption, our bread consumption in the United States tends to be relatively stable. There's a little bit of variation, but it's relatively minor. If you notice, the red line, which is exports, is really where the volatility is. And again, in a typical year, more than half of our crop is exported. But you also notice the last 3 or 4 years, that's now started to stabilize. And part of the reason for that is the major competition we're starting to get in the global market from the Black Sea region, which is primarily southern Russia and Ukraine. And I'll show you some graphics in just a minute to explain that. So what's happened is the competition in the global wheat market has now been increased. U.S. wheat supplies have been very adequate. We've been having a difficult time, in particular for hard red winter wheat, being competitive with those Black Sea sources. And so they've been able to basically take over some of the market share that we had, in particular in the Middle East, but also in North Africa. And again, that's starting now to have an impact on wheat prices. The black line on the bottom is feed usage. Again, a lot of the wheat that goes into the feed supply chain is really that off-grade or low-quality wheat, something that's not really acceptable for milling quality. Next slide, please. Look at accumulated exports. We've been export pace very similar to what we've seen the last several years. Again, we're right on track with that. If you look at the next slide, please. We have three major buyers of wheat, the dominant buyers being Mexico, Philippines, and Japan. And I do want to comment a little bit on the COVID-19 and the impact that might have on the wheat market. All of these three countries have had their own individual issues with COVID-19, in particular Mexico. And if you noticed in the previous slides, Mexico is a dominant buyer of U.S. corn, but it's also the dominant buyer of U.S. wheat. And so my concern is, as we move forward in time, that the Mexican economy, because of COVID and the economic recession that's happening globally, I'm a little bit concerned that they may start shifting some of their purchasing habits. They haven't done that yet. We haven't seen that impacting the grain markets yet, but we will have to watch as we move forward in time and watch that export pace and the buying pace that Mexico has. Again, if we look at our major customers, the amount of wheat that they're buying has been relatively stable. Their current purchasing and purchase rates are very similar to what we've seen in previous years. China now, if you notice on the very bottom, China has come in and started buying again some U.S. wheat. The record wheat purchases historically have been in 2016-17. They've now matched those this marketing year. Now, those levels obviously are not very large, and most of that has actually been hard red winter wheat that they've purchased. So kind of an interesting shift in what we've seen in the past. Historically, they bought a little bit more spring wheat and less winter wheat. Now it looks as though they're buying a bit more winter wheat, I think because of the relative values. Next slide, please. If we look at our major competitors, who else sells wheat into the global market that we have to be concerned about? And I'd like to point to two regions, Russia being the first one. Russia is now the world's largest wheat exporter. They surpassed the United States several years ago as being the largest wheat exporter in the globe as a single country. European Union is also a major exporter of wheat. Again, that's 28 countries, but they do compete globally with the United States. In particular for some of the hard red winter wheat and soft red winter wheat varieties. The export levels out of the European Union do vary considerably depending upon their production levels. Russia now has really become the dominant exporter in the global market. And you look at their next door neighbor, Ukraine, which is also listed about on the far right-hand side there. Ukraine is also a major exporter of wheat. So United States now is kind of in the middle of the pack. We have to be price competitive as well as quality competitive with these other exporting regions. Next slide, please. Again, in the wheat market, one of the things we're looking at is weather. This is a map of Asia. You notice on the very top, that large blob is Russia. The area that I have circled or highlighted in that oblong blue area is the wheat producing region, primarily in southern Russia. The far left-hand area that's white is actually the Black Sea. So the map kind of cuts off at the edge of Russia. I'll show you a map in just a moment that has Ukraine on it. But that southern growing region of Russia, as well as, which is primarily hard red winter wheat that they export, but also their spring wheat producing region, which is near the border of both Kazakhstan and Russia, is also having some drier weather. Now, it's a little bit early to start talking about any kind of yield losses or any kind of lower yield potential, but the markets are watching this, especially as the winter wheat crop next spring will start to break dormancy. So on the next slide, this is a map of Europe. So on the far right-hand side, that's highlighted in the blue oblong, that's Ukraine. The Ukrainian soil moisture conditions are very dry. It's already some discussion about the winter wheat plantings being cut and farmers waiting till spring and planting probably corn or soybeans instead of planting winter wheat this fall. Another producing region in Europe, which is the other blue oblong that I circled, is actually for France and Germany. France and Germany are the two major wheat producing regions and exporting regions in Europe. As you can see by those red blob, that you know, those areas are also very, very dry. So again, the wheat market, the wheat market is looking at those and saying, well, what is the yield potential and what is the export potential from that region going into the 2021 and 22 marketing year. So again, some things that are developing the wheat market. They haven't hit the market yet, but we will be watching for that as we move forward. Next slide, please. When we look at spring wheat specifically, our ending stocks for spring wheat, again, if you look at the blue bars on the bottom, very adequate. We're near 50% carryover stocks. We have plenty of wheat around. The Canadians also had a pretty large wheat crop, good quality wheat crop. We're going to have some competition in the wheat market as we move forward. Our kind of hope and our expectation is that if China does come back into the wheat market and start buying, hopefully it'll come in and buy some US wheat as well. So on the next slide, I just show who historically buys, the export pace for US wheat, spring wheat. Again, we're kind of right in that normal range of export pace. If the next slide is who we sell spring wheat to, number one customer by far is the Philippines. Number two is Japan and Taiwan. So again, that South Asia market is one of the main areas that we export into. Again, I'm a little bit concerned because of COVID-19 and the global economic slowdown about the appetite, if you will, for wheat imports into the Philippine market. Well, again, I'm watching that relatively closely. On the very bottom, if you look at 2016 for China, they were a pretty large buyer of US spring wheat in 2016. They do have the capacity to buy that plus more. There was a recent announcement actually this morning or yesterday that China purchased some wheat from France. So again, they are in the wheat market. They are buying some wheat products. Hopefully, I guess I've got my fingers crossed right now that they will come in and buy some US spring wheat as well. Next slide, please. So I'll pause very briefly for questions and then we'll move on. I know I'm getting close to my time limit here because of some technical issues, but I'll try and finish up in just a few moments. Any questions on wheat? All right, seeing nothing, let's move on to talking about China. What's the motivation? So I've tried to list these kind of in priority. So in my opinion, one of the reasons that China has come back in to the US market and buying so much of US wheat is because there is this underlying demand from their livestock sector. They're starting to rebuild their pork herd because of the African swine fever cut the pork herds pretty substantially over the last couple of years. They're starting to get that under control, trying to rebuild their pork herd, rebuild their pork supplies. When African swine fever first hit, there was a massive shift and a potential increase in not only their poultry production, but also in eggs, dairy, and aquaculture. And so that infrastructure and growth in their meat sector, the animal protein sector, is still there. And as they start to rebuild the pork herd, there is this massive underlying demand for feed and feed products. And we're seeing that spill over not only into the corn market, but also into the soybean market. So I know there's a lot of rhetoric and a lot of confusion about what China is actually doing. Again, you have to be very careful about the public announcements that are made. But if you actually watch what they're doing, watch the actions and help that kind of backfill the story, a couple things. The Chinese government historically has owned very large reserves of corn, wheat, and rice. Not so much for soybeans, but corn, wheat, and rice as their strategic reserve in case there was a problem. Now, what they've been doing over the last several months is actually selling off or auctioning off their reserves of corn. And those corn reserves now are starting to get much, much lower. There's also been a lot of interest from an auction market standpoint in the feed companies buying that corn off the globe, off their domestic market. So we know because of the auction values are being reported, we know that there's strong demand for soybeans. The Chinese have gone into the global market and buying significant amounts of sorghum and barley, as well as corn. There's also reports internally of some low quality wheat within China, as well as low quality rice that's being diverted from the food supply into the animal feed sector. And so again, all of these signaling that there's this underlying strong demand from China. Next slide, please. One of the other things that's happening, there's been a lot of reports that the private companies in China are also beginning to build their own reserves. They're privately owned reserves. It's not a government reserve, but it's actually owned by the private companies or government-owned companies like COFCO. And part of the reason is because of this ongoing political tension, economic tension between the United States and China. And right now, the expectation is that political tension is going to continue, regardless of the election that went on in November, regardless of the shift now to a Biden administration. That political tension between the United States and China is expected to be there for quite some time. And so these Chinese companies now are buying and holding some of their own reserves just in case. There's also, as I mentioned earlier, some questions about the concerns of the Brazilian and Argentine production. And again, Brazil and Argentina export both corn and soybeans, so they are an alternative source versus the United States. The phase one agreement, again, for time, I'm going to have to fly through that pretty quickly. In my opinion, the phase one agreement is kind of frosting on the cake. It's not really the driving factor behind why China is purchasing more corn and U.S. corn and soybeans, but it is one of those fringe benefits that come from it. Now, it's very unlikely that China will reach the targets, the dollar targets that were set forth in the phase one agreement, but it's going to be a pretty substantial year. We're going to return to those levels that we saw before the trade war. Next slide, please. Actually, I'm going to skip over the next couple. So if you just skip to the next slide, next slide. This is the one I want to spend just a moment on. We do have the ability to track through the USDA does keep track of not only the volumes that are shipped, but also the values. And please understand, phase one agreement is all about value. So the phase one agreement is measuring calendar year time period based on dollars. The information I just showed you is marketing year basis based on bushels or tons. So I have been trying to track what has China been purchasing and how does it compare to 2017, which is the benchmark that's set forth within the phase one agreement. If you look at these, they're a little bit behind on value for soybeans relative to this time, the same period in 2017, but the total dollar purchases for all categories covered by this phase one agreement are actually slightly ahead of the pace that they were in 2017. Also, please note that this is January through September, and a lot of the really big buying of both corn and soybeans have occurred after this September time period. So there's a delay or a lag in getting the information from USDA and being able to compile that. Next slide, please. So I'll stop for questions. It looks like there's a new one that came through. Any thoughts on canola? Yeah, very quickly on canola. The canola price does tend to follow, because it's a competing oil seed, does tend to follow soybeans. We've seen a pretty dramatic increase in canola and canola prices. That's a good thing. The Canadians also had a pretty good canola crop. So the total supplies are there, but that demand base, it's all about the demand base and these competing oil seeds. So right now it's soybeans that's driving the bus, and canola is coming along for the ride. And it looks as though the canola price will continue to follow. So I'm pretty optimistic on the oil seed and the oil seed forecast. Okay, so it looks like I have 1 minute left. So I just want to make a couple concluding remarks on COVID. From the COVID standpoint, one of the things that I'm following, the major issue for coronavirus is really what's happening internationally. I know we've seen some shifting supply chains in the United States, which I refer to here, but what I'm really concerned about, the impact of COVID on the grain markets, is that highlighted blue is what about the global economic recession, and how is that going to impact the buying habits of Mexico, Japan, Philippines, and the European Union? And again, obviously exchange rates have a big influence on that, their ability to recover economically from the COVID issues. Even though it looks like we have a vaccine that's going to be hitting the market here pretty soon, this is a global pandemic, and it's going to take a significant amount of time to distribute the vaccine, not only in the United States, but also in these other countries. And so even though we haven't seen major shifts or changes in consumption habits or importing habits yet, I'm watching really closely, and I'm a little bit concerned that as the economic pressure in some of these other countries begin to build, that they may start changing some of their buying habits. And so with that, I'm at time at 4:30. You guys have been extremely patient. I apologize for the technical issues. I'm not really sure what's going on with my computer, but we'll stop right there, and I'll try and answer any other questions that might be on people's minds. And again, I just want to, and Dave, you'll probably mention this as well. We will have office hours. So if there are additional questions or things that you want to talk about individually or as a small group, we can certainly do that. Those are scheduled for tomorrow. So with that, again, I really appreciate everybody's patience. Again, I apologize for the technical issues.